MarketColor Market State Analytics provides traders with an unbiased, fact-based resource that objectively defines the current market state condition. This fact foundation provides context to align trading methods and create a more systematic, sustainable trading approach. Context: the interrelated conditions in which something exists or occurs, the environment or setting. Market state is the context in which the drama of the trading day occurs. MarketColor provides traders with an objective resource which offers a quantitative definition of the current technical environment or market state. MarketColor is not a subjective forecast of what the state will be, but rather a comprehensive insight into the context of what the current market state is. Without context, trading decisions become guesswork, as there's no basis or benchmark to define why a tactic worked one day and not another. No matter how disciplined and refined a trading tactic becomes, without a supporting contextual or strategy foundation, it is unlikely to be sustainable. Only when tactics are aligned with a strategy is there a basis for real success. From the Chinese philosopher and warrior Sun Tzu, strategy without tactics is the slow route to victory, but tactics without strategy is the noise before defeat. For trading tactics to succeed over the long run, you need a strategy foundation. The basis of this foundation is market state. JSServices Market State Analytics are a quantitative indicator whose design is to identify the characteristics of the market state to present the context of the current condition. Not a subjective forecasting model of what may be, but rather an objective fact of what is. This fact foundation provides the basis to create a more systematic execution of a trade plan and a sustainable approach. MarketColor is a quantitative study that was developed in the late 90s as a solution to provide context and feel to electronic trading. On the trading floor, there was almost too much color, and the emotional pulse could actually be felt. As trading moved off the floor, the markets changed. Discretionary traders needed to extend their durations to compete against machines, which dominated the high-frequency landscape. Without that emotional pulse, the transition off the floor was difficult, as there was no feel from the screen. MarketColor was the solution, which mathematically identified known behavioral conditions and used color coding to provide an objective picture of a market's technical profile. A market's color could be identified at a glance, and a trader could anticipate price action characteristics of known conditions. The MarketColor profile for an analyst was great, as it afforded the ability to quickly identify the technical foundation of a market by presenting a picture of the guts that defined its state. The unique feature of the MarketColor profile is the color coding, which affords the ability to quickly break down and analyze complex technical information. The intricate detail and subtleties that the profile identifies provided real color to what the environment is, so price behaviors associated with these facts can be anticipated. The detail was great for a technically inclined, but too much that prefer a more straightforward, direct result. The technical profile results were summarized into a single integer value, bounded by a scale ranging from positive 11 to negative 11. The score value, or market color value, provides a bottom-line definition of the market's technical position as either non-trend, trend, or extreme. The goal of the MC value is not to be predictive of what will occur, but rather define a fact of what is, the current technical state. The MC value is a snapshot of what the technical position of the market is, identifying a market state at a glance. The technical profile and MC value offered a picture of what the technical condition is, but did not show how it came to be. A market could have identical MC values but a different expectation based on how it got there, the shift in the MC value, or MC value change. A market with an MC value of positive 5 is in a bull trend type general market state. If the prior session was an MC value of positive 1, a non-trend type state, then an MC value change or shift from neutral to trend is a breakout signal, adding a unique signature and expectation to the MC value 5. A prior session of MC value of positive 10 an extreme condition, shift lower back to a bull trend MC positive 5 is a bull trend digestion signature. The unique characteristics produced by the magnitude of the MC change provided a general market state type with a unique signature state definition. The bounded nature of the MC value offered a matrix where every potential MC value change or shift type can be quantified. JSServices has classified a total of 26 unique signature state conditions or market color bias. The market color bias characteristics set a price behavior expectation for a given trade period. They further define the signature market state, providing deeper insight into the nuances and tells of the condition. Knowing the state characteristics improves awareness and provides clarity in determining when market states are changing, so tactics can be optimized by aligning with real-time events. Think of this foundation as the playing field that the drama of a given trade period is going to play out on. Every trader has experienced each one of these signature states at one time, but are typically not aware of it till after the fact. By having this contextual awareness, trading tactics can be systematically aligned, and price behavior can be anticipated in real time, improving intuitive decision making. The market color analytics identify the facts associated with the current market state and its unique characteristics. These characteristics provide insight to how price action should behave within the session, so tactics can be aligned to optimize performance. As a practical application, focusing on the facts, take a look at the desktop grid. Here we're looking at the S&P 500. Market is in a bull trend, and a bull trend is typified by a market that continues to make higher move highs, higher move lows. Positive structure, that's the environment. We've got a market that's trending higher. This doesn't mean that there cannot be corrective setbacks, but any negative price action is expected to exhaust above, let's say, the lower inflection point that will maintain structure. So you get these sharp corrections above structure, sharp correction above structure, but the market acts like a balloon underwater and continues to go higher. That's the definition of a trend. And as long as the market's doing that, we should anticipate and have these expectations that the market's going to continue to trend. If we get a failure or a break in this positive structure, it's more likely to produce a neutral shift than a corrective transition. So if the market stops making higher move lows and breaks this structure, we'd anticipate to drop into neutral versus to have a big reversal. And the attributes of this state is we've got a market that's got good momentum, it's a positive bias. We could see some good, decent volatility in a trend type state, and this is a trend positive market state. If we look at our market color profile, how do we get to that bull trend to see what's the guts of this market? We can see that our trending indicators, our moving average and DMI, are positive, blue. And if you have a question and you're not sure, you can always click the question marks and go to the tutorial to see, answer anything. Here the color code, blue is bull trend, and purple is trending, red is a negative signal. And so what we can see here is we've got our trending indicators are positive, we have follow through potential, but the oscillator is red. So this is telling us that this trend might be a little overbought. It's not the beginning stages, we might be a little extended, and the stochastics have a little bit of a transitional signal, so we have a little bit of a potential issue here on this trend, but the dynamic channels are still saying, hey, we're in trend mode. Net, we're an MC value of 5, and if we look at the grid, here's our 5 in the bull trend zone, and the change from yesterday was 0, so no change, so we're just hanging on to this positive trend. So taking a look at an intraday chart, here's the midnight start, and we can see that this market is performing like a bull trend. You've got, even intraday, you've got a market that's trending higher. You have a corrective pullback, back to structure, it holds. We have a strong surge, pullback, can't follow through, and the market continues to make higher move lows here. We did have some violent action here, and that may be having this sharp surge. When we look at our profile and we see that this market's a little extended, we should anticipate that. We've all traded in bull trends that are a little extended, and how do they trade? Well, sometimes they can be a little stop and go. The market's trying to work higher, but it's a little overbought, pulls back, shakes off some of that overboughtness, and tries to anticipates it, do it again, tries to push higher. Again, it's just aligning your expectations with the facts. So we take a look at another stock index. This one's the Russell 2000 ETF. It's in a different market state than all the rest. It's in a neutral digestive state, and neutral digestion signature state is typified by sideways environment, choppy trading conditions. This is the expectation. We're not expecting this thing to trend. Opportunity can exist on both sides of the market. Although we should realize profits sooner than later, because we're not expecting follow through. We do have to be aware that when neutral digestive states transition, they can be the precursor to a breakout. And this will be signaled by coiling action that will build power. But if this does happen, it's usually happens at the start of a session, and using a simple moving average is a great tool to define a breakout day. So our expectations are more sideways. Our attributes, momentum is going to be churning. Got a balanced bias. Volatility should be decreasing, and this type of environment is a range trade. When we look at the color profile, how do we become a neutral digestion? We see our moving average systems are brown, so that's neutral. Our DMI is still blue, so we still have this underlying blue. Brown ADX has no follow-through potential. Our stochastics are transitional bull. It's a little bit lackluster, still hanging on relatively positive, and that's why we have an MC value of +3. There's no change from the day before, so again, more lackluster. We look at the 10-day plot, and we can see that the market did reach up to an extreme, and it's pulled back, and now it's kind of starting to stabilize. So is this market going to try to bounce back into the bull trend, or is it going to fall farther back into neutral? That's really the what's going on here in this in the IWM. And here we have that market trying to reestablish that bull trend and jump back into the bull trend, but it doesn't have that follow-through potential it's a brown ADX. And we're going to watch price structure, and we have an expectation that this is a rally to nowhere, and here it's confirmed it doesn't hold this structure, and this confirms this kind of low volatility sideways churn signal that dominates the rest of the session. Crude oil is another market in a neutral digestive state. If we look at its profile, it was completely brown, and it's just really dead in the water. And you can look at the 10-day plot. No MC value of 0, no MC value change, and this thing has just been hugging the midpoint. So this market has just been non-eventful, going sideways, and it performed to expectation. You had this market, it starts to build some structure. Is it going to have a breakout? So you're watching price structure. Maybe this is the day that crude oil is going to take off, and it's working price structure, and then here we get it starts to break down here, and this is a little bit of a tell for this, that the market is breaking below these support levels, and here it's a confirmation. And actually, even this break-in structure here, where you clear here, it can't stabilize above here, breaks here again, and here it finally, absolutely, if you weren't sure if this thing's going sideways, here it confirms that this thing's going nowhere. And so you have this emotional trade here, and then this rally, this break-in structure told you that this rally isn't going to follow through. It really comes through, and you're always looking for things that give you the truth. So we know that this market state is neutral, and we know that it can be the precursor to a breakout, but we also know if it's going to break out, it's going to hold positive or negative structure. And if it doesn't, then we know that then our expectation is that it should have this sideways expectation, and these attributes are going to dominate. And that's what happens in crude oil. It starts, breaking out. It's break in structure 1, break in structure 2. This is even the third, and so this we're not getting sucked into that rally. We're anticipating to fall back into more of a neutral posture, which it did. The market grid makes it easy to see different types of states. You can hear this jumps out at you. It's green, blue, bull trend acceleration, very real action state. A bull trend acceleration is typified by acceleration in price appreciation. The market has produced a major positive technical signal. It should follow through immediately. If it's valid. If this is really true and it's going to go, it should just go. And the key tell for follow through is the market able to hold positive structure. If you can hold positive structure, that's your story, your expectation. It should just start to run. And sometimes with this this market state, you have the big positive technical signal. A lot of times that might be it. And these states can be followed. You come into the bull trend acceleration, and the market can immediately turn the other way and give you kind of a corrective pullback because you had that positive signal the day before. Everyone's coming in to buy it, and it signals kind of a one-day short squeeze. Then or one-day squeeze, counter trend move against that positive signal. So that's something to look for. You have it could just be a kind of a one-day event where you had the big positive signal, then they squeeze everybody, and then the bull trend tries to kind of resume itself. So that's just part of this condition. Again, we've all participated in bull trend accelerations, and that is just a function of what that state is. So just being clued into what that environment is gives you more insight to how to trade it and align your tactics. And we look at the guts of the market. How did we get here? Well, our moving average system is brown. We've got a DMI system that's positive. The ADX is purple, so we still have some good follow-through potential. It's not fully engaged. Our RSIs are not overbought, and we still have a good positive foundation in this market. The market was in an MC value of +5. In the prior session, it was an MC value of 2, or an MC value change of 3. So we were in the 3 zone. We jumped up to the bull trend zone. Are we going to follow through? Are we going to bust into this bull trend zone, or are we going to fall back into neutral? And that's good info. Really, giving you better clarity to what's happening with this condition. Why are we here? What are we poised for? So then we take a look at the market, and immediately on the opening in the gilt, it opens up lower, and it breaks the the previous session price structure. So that's not immediately. It's telling us it's not performing like a bull trend acceleration. And so this is a corrective signal. And so what's part of this state? That could have been the one-day surge the day before. We might have some corrective action, and we do. And trending markets like to trend against each other too when they correct. So you're watching lower move lows, lower move highs, lower move lows. This market's working, as long as it's working that negative trend, it's working the negative trend. And then here we make a lower low, and then we make a higher high. So this is a tell that this corrective trade might be over. And what do we know that the foundation is? Well, the foundation is still positive. We still have a good positive foundation here. Our DMI system's positive. We got good positive follow-through potential, underlying positive here. So we have that underlying positive foundation. And so here's our break-in price structure. Here we confirm it, and then the bull trend tries to re-engage. So it's kind of a classic bull trend correction where they're squeezing, and this could just roll over. So you have to respect that corrective action until it breaks structure, and then that's the tell that, hey, we might turn, or we're just going to go sideways. So the DAX is another market that's in a bull trend acceleration. So again, nice thing about the grid, quickly identify it, and also you get a better understanding what this environment is. You own this environment, you own these nuances. You feel comfortable, and you might gravitate towards certain market states. So we take a look at what do the guts look like? Well, this looks a little different. We have both the moving average and the DMI in positive situations, and actually the DMI is generating a positive signal. What we don't have is the follow-through potential here, but we do have this big positive signal, so that's impressive, and sometimes it may be the start of a new trend. And it does have a good foundation with the stochastics and dynamic channels. The oscillators are still brown, so it's all good. MC value of positive 8, so it's a little stronger situation. And we had an MC value change of 6, so really big technical signal where we're jumping, out of the neutral zone and into the bull trend zone. Big strong signal. And taking a look at the DAX, the market opens up a little bit lower, and then it just continues to perform like a bull trend acceleration. It just continues to hold higher move lows and work positive structure. This is where using a simple moving average. Simple moving averages are great tools to kind of pick out trends and to keep kind of keep you on track. And also just watching price structure. If you are in a bull trend acceleration market state, you had a big positive signal, that's your underlying foundation. That's the playing field. And you have a market that starts to build structure. It's breaking out, produces a breakout signal, starts making higher move lows. As long as it's making higher move lows, that's your expectation. Your expectation is this thing to accelerate. And as it continues to make shorter pullbacks, that should give you confidence, because what's happening is the market is performing to expectation, and it's working its attributes. This is what's the expected. The expectation is smaller pullbacks. And if it does that, this gives you confidence that this thing could just really just run. And then it does give you this super acceleration. And this is first break in structure, second break in structure. The market continues to hold and ends up closing on your highs. And this is really a classic textbook bull trend acceleration, price expectation. If you're going to open a book about market states and you're going to read about a bull trend acceleration, there's your expectation, and here's performance. The MarketColor Analytics, more than anything else, are an awareness tool that provide clarity to what the current condition is, so your trading methods can be optimized by aligning tactics with these facts. It's important to stress that in contrast to its subjective forecast, the basis of the MarketColor Analytics is to present an objective fact-based truth, to improve awareness and provide a foundation to create a more systematic trading approach. For more information, please contact us at info@JSServices.com. Thank you. We appreciate your feedback.